All right, hello everybody. How's everybody doing? Good? Okay, so you can see that for the details of the new venture that will be coming out next week. So any of you that still didn't get on the priority list, just email me at Trading with Jasmine. Hello everybody. How's everybody doing? Good? Okay, everything should be good. So really excited about that coming out next week, and the team is working very hard in getting everything that everybody needs, and we will go through that as we get into next week. So for today, all right, so you can see for today that for the most part, the major markets are within our supply and demand ranges. And we'll go through that in a second. We'll see that we've hit demand, hit supply. We are testing the upper ranges of some of these, but we are definitely still inside of the overall range. So the low risk, high reward opportunities are going to be still outside of these ranges at the moment. But we will take a look at what we've come into, where we're sitting at, inverse markets, all the other things that affect what we are looking at coming into today. And I know tomorrow is NFP. The only thing I will say about that is typically you do like to stay away from the smaller time frame initially when it comes out. And then as the day goes on, that's fine again. But just initially, you like to stick to those fresh areas of the higher time frames. Okay, let's go and take a look at what we... All right, so you can see right here, last night, after yesterday's sell-off and moving into today, we did have a bounce off of the Nasdaq already. We have some fairly close overnight demand, and prices are still holding at that at the current moment, but you can see that we have taken prices from the Russell demand all the way up to the Nasdaq supply. But remember too, with this supply, it's been in the same 240 area. So it's not a fresh supply in terms of the location of it. We could definitely go higher as well. So don't be too surprised in terms of holding some close demands at the current moment. And you know, with all of this, ahead of tomorrow, you know, the market basically expects, you know, it's going to be a very, very bad number. There, just like last time, there's not too many surprising points there. I believe that actually, if it's a little better than expected, it'll probably actually rally. You know, if you take a look at these markets with all the news and all, you know, in good markets, it doesn't matter. You know, bad news, good news, and middle of the road news. Oh, let's just rally. When it's bad, you could have good reports, and it still sells off every time. So, you know, take it for what it's worth. It's already, you know, this month they said, okay, we're trying to figure out what March is about, but most of it, everybody kind of knows. Everybody's home, so it's not a surprising factor. What it is you know, what's going to do eventually to the whole economy, but you know, for the moment, everybody kind of knows what the whole picture looks like. All right, so let's look at it on the charts now. Okay, so you can take a look at the S&P. on the future side. And what we see is that prices have the rally off of the weekly demand has continued, and we are up right back up to, you can see this previous high area. This is a monthly, but you could just see where we're back up to. We've come back and test. This was the last little breakout. Prices now are back testing that overall area. So it looks still important in terms of can it rally further to get back up to previous highs. We can see on the 60-minute, the overnight demand that it came down once before. We went very deeply into it, and now we're back, right back up into this overall area, with the higher supply coming up at 29.40 to 29.54. At the current moment, like I said, it is testing right back up at these highs again. So we could just struggle in terms of, because the Nasdaq is in the low supply, so we could struggle a little bit up here. You do have some overnight demand a little bit lower. It's already hit this first one. The second one, it can also hold too at the 28.60, just a little bit messy. So I'm looking inside of this general area at 28.44, 28.41. The fresher area is still coming in at 28.14 to 28.07. So you can be on the lookout. If you do see some sell areas, you could go in on a sell area. Because if you take a look at the Nasdaq, so this is what it looks like right now. So this whole area that you're seeing is basically the same zone here, right? So we've had this 4-hour zone where prices have fallen. And now we're coming all the way back up here. So it's the same, that 60-minute is really within the same area again. Going up a little bit higher, you can see the next areas of the Nasdaq where we're pretty much going to be testing the highs. You have the first gap that's going to be coming in, and then the higher zones. Are coming up above this 9,500. See if I can open it up a little bit more. That comes in at the 95.52. There's two levels on top of each other. It goes up to 96.44, but you could take a look at it, two levels on top of each other once it gets back up there. And you can see too, right? New demand forms. We continue to rally off of it, and now this is the look of things as we come up to retest the same zone. So the only thing I would say is, even though you should be getting in at the prior demand zones today, even though we can go higher, it's going to be a higher risk, lower probability trade to try to take it. So even though it was fine yesterday to take it, and today we could very well continue to rally, but for myself, I would like to err on the side of caution just because of where we're at. And so I'll come in and take a look a little bit later, but that's my feeling for the moment, just because of given the situation. If there's sell areas that develop, I'll definitely still take that too as well, but erring on the side of caution on the close buy areas. Because you can see we do have a close 60-minute down below on an overnight as well. All right. And in general, I mean, if you think about the stocks, right? If you really think about it, I mean, you think about the FANG stocks. If you have the Netflix and the Google and the Facebook and those type of stocks, they're not going to do bad in this environment. So it's not surprising that the Nasdaq is the one that's rallying out, providing the most strength, almost reaching back to the highs before everyone else. I mean, that's not surprising. You have the others that, as we took a look at the other day, we have the Disney and the Boeing who's still holding below their gaps. That's going to affect other markets, especially the Dow, somewhat the S&P, but especially the Dow. And then the Russell, you have the small caps, which in general is going to be a little bit of a lagger at the moment comparing to the Nasdaq. But we can take a look at the Russell. Not too many changes in the ETFs, so that's why I'm not doing a whole lot on the ETFs today. If we start getting out of the ranges, then we'll have more developments in the ETFs. All right. Yeah, correct. That's what I just went over with that. Yes. Everything. That's why so it's important to read the bullets that we have in the current market focus, because that's what tells you what's going on even before you get into the charts. So those of you that come a little bit later, you might miss that, but you can always go back in the recording and see it. And that's what's telling you right now that we are not at low risk, high reward opportunity areas, because we've hit them, and we've hit them both on both sides, and now we're kind of sitting in them. So anything that you trade in between becomes that in the middle of the, white space type of area. So you can see this finally came out of overall range, and then did come down and hit the demand zone down below. Very nice rally overnight. We have a couple of things going. We had some of the inverses fall back, some of the safe havens, pretty much all of them, because we had a couple of things, dollar strong. So we did have the yen, the Swissy, gold, bonds, all of them falling back. What I'm seeing though, as we come into this morning though, it does look like it's losing a little bit of that inverse correlation in general with the markets, because I'm seeing that the stock market was moving up, and the bonds started moving up too. So I am starting to see a little disconnect coming into this morning. And we could definitely have it again tomorrow. Anytime you have a big report too, you have the FOMC, NFP, all these markets can move together for a short period of time, just because that's a lot of times I see that happening. And so you can't really use them particularly when the news is coming out. But this morning too, I am seeing a little bit of a, overnight it was fine, and then this morning I am seeing a little bit of a disconnect. But you can see now as we come up, all these supply zones, even though we can fall from them, none of them are truly at a fresh area where we haven't tested before. So you can see with all of them that it's pretty much that scenario. Okay, overall too, a bigger picture if you're looking at it. Coming off of our 240 zone. And now you can see right in the middle of it all. Still pretty far away from the upper 240. But in the middle too, we do have in between, not this 30, I think it's the 60. That we still, that's going to be in the middle of the range as well. But it will take us out of this range that we're in at the current moment. So we do have those two that's right up above current price at 1308 to up to 1334. Okay. Well, the oil is, you got to think of it this way too, because typically what you want with oil is if you think of it on the consumer side, we love the cheap oil, right? But even though nobody's really moving anywhere, but in general, you love the cheap oil. But what the problem is, when the oil was crashing at that rate, it's going to affect also the U.S. Production of things, and then losses of jobs and all of the shale oil and all that. So then it becomes a problem, because then it's going to affect the U.S. companies, and it's going to affect people's jobs and everything. So that becomes a big problem. Then that becomes a whole thing where it takes the market down. And now when they say it's almost like a relief, right? Saudi Arabia is raising prices again, who knows if that's just trying to fake out the market, I don't really know. But they're raising prices again, so that's creating an extra surge in oil right now. But what we see technically on the charts when we get there is that there is a huge open gap up above, which is not surprising that prices can rally, even without the news. So that's not too surprising. The news just aids a little bit faster. But that's it. The scenario with it all is people are just relieved that we're not, going to be hurting a big part of what's going on over here with production and all. So that's why you can see equities also rallying. Because if you really take a look at it, we go and take a look at the where we're having issues is still going to be overseas, where especially with Germany and all, where things are a little bit unsure. You could see their markets. It's definitely come off of the lows with the rest of them, but definitely have struggled quite a bit now with everything that's going on with the Eurozone and all. So, there is still some differences going on in the world, and it's the good and the bad. Do you pay attention to exactly, because say for instance everything does get weak and does come down, everything's going to follow each other. However, at the same time, if the U.S. still has the strongest market, people are going to put their money inside there. So if the stocks in the U.S. are still going to do well, then they are going to move from overseas to come back into the stock market here. So it can go both ways. If everybody is going to get weak, of course, the whole area is going to drop. But you can just see where the DAX is right now. Really has not even gotten back to its gap zone. Right? It came pretty close to the gap, and then the 15-minute up above. So it's still erring on the weaker side in general, which is different than the Nikkei and the U.S. markets right now. Okay. All right, let's move on to the Dow. So you can see with the Dow, same thing. We are still holding below the 60-minute supply zone. So again, we're in between everything, so we can definitely move in either direction at the current moment. Do you have some overnight inside of this overall area? Yeah, you do have an overnight. It's holding at the very first one. You have a messy one, then you have some more down below that is also overnight. So yeah, you do have some overnight areas within it. But like I said, is it highest quality? No. So in this type of situations, if I wanted to take it, I'm going to definitely cut down the size. I'll see as it gets back down there if there is any opposing areas too as well. But that's usually what I'll look for if it's in not a quality situation. I may not negate it altogether if I'm doing day trading. But if you're looking for the bigger, higher time frame moves, then you gotta move out of these ranges in order to do it. Could be NFP, may not be. You never know these days, because a lot of things are overall expected. With this market, though, we have expected it because of the bonds. you can see with the bonds, so this is the situation also at the current moment. We have definitely fallen off of the 240 zone. However, you can see where we've come down right into. Right? So equity started to rally out as we come into the 240 zone. Now, the only difference I'm seeing is we are holding above here. We did take a little bit of a fallback, but in general, still on the strong side. So I do feel like we lost a slight little bit of inverse correlation coming into this morning with the bonds. And with all of this, the massive Fed stimulus, uh, it's changing things in terms of now what's going to happen with the Fed in general. We know that the central banks don't want negative interest rates as much as the president does. The central banks don't want negative interest rates, right? So you have the benchmark treasury yields and the mortgage rates. They are getting better. However, they are still near your 2008 crisis, right? So that part about it, especially the fixed 30-year mortgage rates, I mean, those are still on watch with the Fed and the Fed. So now the question with the Fed is, will they have to do more, even though the equity markets are not showing strain? But will they have to show more because we have these marks that are still near where the 2008 crisis were? So are the things that they're doing enough to be able to save what's going on? So will they have to do more? But actually, if they do more, it's just going to create more of a stock market rally, right? So that's something to watch out for in the in the time to come between this and the euro, because that looks like where the little fight between the dollar and the euro is going to be coming in, between what's going on with the euro now, which we'll get into once we get there, and what is going to go on with the dollar, with the mortgage and the yields at the moment too. But technically, we can see that we are following within this overall area, slow, but definitely moving between the supply and demand levels inside of the 10-year. That was just the 15 minutes. Let's go to the 30-year now. So the 30-year never made it back up to its higher 240 zone, which it still has above. However, it did come down to its second. So we had hit this area on the first one. We traveled all the way up. It did hit it again, then had some new supply. Now we've come down and we hit the second area. So we've had this in for quite some time too. It was an overnight zone, but is an area that created a large strong move in price. Now you can see we've hit back into it again, another pretty strong area that we've had a rally out of. In a smaller time frame, we do have a little bit of supply up above. Let me just see if it actually. Oh, it's not on here. Let me see. Okay, so on the smaller time frame, you can see where we're coming back up to test this overnight area. So now this kind of is going to tell me as it starts to move back and forth. If the equities are going to lift a little bit higher, I believe that we should be able to try to come down again. But if the equities can try to roll around and move, then as it comes back and hits this lower area, then it should be able to move back up as well. Now creating, then I would imagine equities start to come back down again, even though we've lost a little bit of inverse correlation in the morning, but that's what it looks like it should be trying to do at the current moment. So So if we get that extra push inside of this, we should see a little bit more of a move back down. All right, so that's on the bonds. Now let's go and take a look at gold while we're here too. So gold, just like with anything else, in terms of where we are, you can see that really nothing is of great quality. We've hit the 60 supply, and believe me, if you taken either one of these trades, you probably wouldn't even be messing around inside the middle here. But I know a lot of you like to, get up and do your daily, look at things and see. But you can see you can get very chopped up too while we're inside of these two ranges here. You can get very, very chopped up. And now the range is getting tighter and tighter. We are on the lower end of it, but it is getting tighter and tighter. So you can see on the 5-minute. So I have to show you that because you have to know where you are before you even are trying to attempt any of these. Just knowing small position size if you are going to try them. 5-minute inside of a area that's so you can see right now down below we do have an overnight area of demand that's coming down to 1692, 1690. This area, this supply we've tested a couple of times, and then the upper 5-minute, and all of this is between. You can see yesterday's high, yesterday's low. Over this one will be at the current moment. Yeah, it's still going to be above the overnight high. That's a 1704, 1706, 90. And this one's going to be above the overnight high and overnight low. All right, let's go into crude oil. Well, let's take a little bigger picture look first. All right, let's take a little bigger picture look. Like I said, overnight they did say, well, Saudi Arabia's, raising prices, blah, blah, blah. Are they jumping the gun? Who knows? Who knows anymore with this, the OPEC and all those markets, they're going to do what they want to do. And but you can see that on a couple of newly formed demands, we have continued to rise up. These have become now further down the road, but you can see what we do have. Up above on the 60, right, we do have room to move up to the 41.85 to 42.75, and then 43.42 to 44.68. So that's above on the 60. Should we try to fill that area? So you can see right here, it has hit the daily 50, fallen back. We had two close demands. First one tried to hold from. Second one is causing the rally aided by the news. And now on the close ends, on overnight, you do have down below two overnight 5-minute, 2-minute area, 24.78 to 24.65, and 24.51 to 24.36. Just don't forget where your other. Just want to make sure your other 30 minutes are. Should we have a little bit of a pullback? So don't forget that, a bigger pullback. first one is retested, and then the other two are going to be more of your day session. That's coming in closer to the 2059 down to the 1993 area. All right, let's move on. I did get a little bit blindsided by the nat gas, only because I didn't look to see as we were moving up that it was coming. So remember, this market was very weak, and now making that run back up, did eventually take out the daily 50, but you can see right back up to the daily 200. That's where the big one, and I didn't see that at the moment, and that's what's causing that little bit of a fallback. It's still overall got a nice recovery. It's still hanging into this overall larger overnight zone, so we can possibly still have some new demands come in. So you watch out for that. At the current moment, it does have some 5-minute areas that's right above on the overnight. And you can see the first one is coming in at the 2020-04. But I would also watch to see if it does form some new demand too as well, since we are sitting in that overall general area. All right, let us move to, copper. It actually came up to into the 60-minute area, but we had also some close demand, and it's right now still holding above it at the moment. See, so once it came up to 60, it formed a new 60 down below. Also, because it's not in a fresh area too as well. If we take a look at it on the, and you'll see, where did copper go? So you'll see where it is. It came all the way back up to, if you remember, where we were looking at initially, and that's where the whole drop started from. So this whole, just like with the others, even though you're having a level inside, they're all inside of that previous zone. So you can see where we're at right now. We've come in, we've hit this close demand. We come back in to hit the same level again right now. You are having a reaction off of that same level inside of that overall 60. So let's see on the 5-minute. On the 5-minute, it looks like we tested quite a few areas, not down until this lower one. We've tested a couple of them on the way up. So it looks like on the 5-minute, a little bit lower. Is this overnight? Yeah, this is overnight. Are you guys still talking about the demand side of things? Let me see. Yeah, you're going to see you have a gap. Well, let's see where that is. 23,500. Let's go back to a 15-minute. 23. Okay, so it's going to be right in this area. So if it does get back to the gap, I would, unfortunately, copper is a pretty big item thing, but you can see you have right underneath that gap too, you have this overnight area. So I would keep this one in mind too, just because this is right underneath the gap. But this is overnight if it does come back. Whoa. Okay. Yeah, for oil, does look like you're going to have two open gaps now. Yeah, well, actually, quite a few now. You have 1, 2, 3, 4, because we're at $26. So you're almost going to have four gaps. The only thing I would do with these gaps is just look at them on the continuous contract to make sure how many times they've been there already. And they're fine to use as a reference point and demand areas. I would just look to see how many times they've been back there on the overnight area. All right, let's move on to the and remember too, with the two markets we did look at the end, that can also, you can continue to watch them. They are still dragging. Let's take a look at the well, let me go back to. Oh, also copper inside of the range also has this new little 240 as well. That's coming in right around that gap area that I was telling you about. All right. I remember that we looked at Disney and Disney went back to retest it, but now you can see we're still below that area. So it can weigh in a little bit on some of the stocks, and also Boeing. But we already know those are going to be weak right now, and you can see as well. Came into the gap, and also for those of you that were into the weaker sectors, even though the rest of the market is rallying. And we'll go take a look at the dollar. Just want to see, you can see it's all green, basically coming into today. Everybody's green, green, green. Let me just look at the Nasdaq one more time, see what it's doing before we move on. Yeah, definitely a slowdown inside of these areas. You can see as we hit the little supply, we are seeing a bit of a slowdown. So I would continue to keep watch on that, and then see if these sectors start turning. To the red side. Of course, right now everything is, between yesterday and today going to be green. But see if it starts turning a little bit to the red side. With the Nasdaq, you'll be watching tech to see if that starts flipping on you. All right, let's go to the dollar. Well, remember what it is in general. With what Sam has always said to you is, these equity markets are designed to go up over time. That's just the way it's how the system is, right? That's what everybody knows. That's how managers work and all. It's trying to get people into the stock market, and so it's just designed to go over time. The bull markets always last a lot longer than the bear markets, and so when you have a situation like this where even you can't wait till everything is solved and then decide to get in. You can see how much we've recovered so far, and it's just the thought of where possibly things ending. Right now it's a large part of the Fed stimulus in general, and now we got states and countries starting to open up again. And of course, the unknown is still in the future, but the stock market goes on, you know, buy the rumor, sell the news type of thing. So, yeah, anytime there's anything cheap, it's like with anything, you know, if you think about it in real life, if something you loved all of a sudden got cheap, why would you say, no, I don't want to buy it? You know, sometimes you say, I don't want to buy it now because it's cheap. Let me wait till not only it gets expensive, but let me wait till it gets above the price, you know? So, I mean, in real life, it doesn't really make any sense, right? If I want these $200 pair of shoes, but no, it just dropped to 100, I don't want it. So let me wait till it gets to 300 because I want confirmation that other people like the shoes, and then I want to buy it. I mean, that doesn't really make a whole lot of sense. All right, let's take a look at this dollar. Completely inside this range. Nothing is more range bound than this dollar at this current moment. You know, and of course, I'm sure a lot of you, when, especially, you know, when it's coming down, looks like, well, it's definitely going to break. Then it's coming up, oh, it's definitely going to break. And meanwhile, nothing has really happened here so far. Even coming into FPN, the dollar can get very, you know, look at it before all of this happened. It was very range bound. And this is just between two 60-minute areas, and it's range bound. So we do have a couple of things. So after Tuesday, you know that the euro came under pressure from the German Constitutional Court. Like I told you that day, that you know, they're basically saying the ECB bond buying was not balanced, so they were going to give them 3 months to change things, right, and to make it the QE proportionate. So the markets got a little shooken up, but then the president of the Bundesbank said, you know, hey, listen, I'm here to support you. If you want to, I want to calm everything down. I'm going to help, and we're going to try to make this right. So otherwise, you know, the Bundesbank's going to pull out. So that's a major thing. But he came out and said that, calmed everything down. But that is causing some weakness inside the euro. The main thing, I guess, so like the two things you want to watch out for is the one, what I said before, what the Fed might do because of the 30-year mortgage and the Treasury yields. That's a possibility of what they could possibly still do. I mean, it's not an emergency type of situation, but they do have to watch out for that. And then the other part about it is if there's any sort of change in wording during these couple of months where the euro is going to still come under pressure because they can't come to an agreement, because we know before that there's always issues, then you know, you have two different things. One is going to create dollar weakness, one is going to create euro weakness. So now it's the battle of who's going to win what. The dollar in general is going to be your kind of safe haven where people go to in times of trouble. So it's stronger usually in general. But right now, given the situation, these are the two things that we're watching out for. And you can see we're very range bound inside of that. Given that we are coming back up to, we have fallen off of the 241s. We've hit into the first 240 opposing zone as we arrive, and now we're sitting in between again. Down below, you do have an overnight also as well in the upper portion of the 240. So all of this is inside the range, which is, you're going to see the euro is going to be very closely looking at that as well. Okay. Remember, the fundamentals will drive the market, but you can't really trade it while you're doing a day-to-day basis. It's impossible. You just have to go by what you're seeing, because the footprints will be on the charts. The footprints of what, you know, you think of the institutionals and all of them, the banks, what they do, in order to put that much money into the market, they have to show the footprints inside the charts. Otherwise, you know, they can't just do it all at once. So usually that's where you're going to see and that's where we come in and try to grab what they're showing us. So you can see here a bit of a messy area overall in general, but what has happened is we bounced off from demand, come into the first supply, and we now hit down again a little bit lower, but generally hanging within there because we do have a I think it's still missed a couple of 15-minute areas down below. Down right below the low right now, the 107.78, 107.70. Looking at it on the monthly, well, let's go to the euro spot market. We'll take a look. Same thing. A little bit lower, you have the 107.66 to 107.59, then 107.56, 107.48 on the 15-minute. And then these supplies up above, you can see the 108.99, 109.26 up to 109.54. Right now too, it is bounced off of this area, but then came into the very close supply, and that's why it's still hanging through there as well. On the bigger picture, you can see it's not fresh also where it's been at, right? This is where it's at right now, just bouncing between the two monthly zones. And the fresher monthly zone would take us, that would be a historical thing, below parity there. So that's where the, it could very well be there, but that would be a, like I said, that would be below parity there. Yeah, you know, with the fundamentals, I like to just keep it in my head. You know, I'm interested in it and keep it in my head just for, you may have some sort of bias, but you do have to, you know, pay attention. These are all footprints made by, you know, whether it be the programs they create, the you know, the institutions, the banks. These are all footprints made by them. So that's what we're trading with the supply and demand. You know, the overall, remember how this whole strategy got started. You know, Sam Simon was on the Chicago Mercantile Exchange where all he had in front of him was the stack of orders, buy orders, sell orders, right? And there was no charting at that time. So what he did was just hand drew the charts. You know, what does this look like? What does this stack of buy orders look like? What on a chart? Or if I drew it in myself, what does this stack of sell orders look like? I draw it in myself. You know, and that's like going from the ground up, and the fundamentals of the basics of how this all works and what it looks like on an actual chart. Because a lot of people, once they come off the trading floor, they don't even know anymore, because now all of a sudden you don't have that in front of you. It's not in front of you. So instead what he did was, let me see what it actually looks like on the chart, what I'm looking at in front of me. And this is where everything has developed from. And that's why it's so powerful, because it's true orders of supply and demand that's stacked in there. And that's what makes it real life, and you can actually trade, whereas a lot of things, you know, a lot of things are lagging. You know, news is lagging. All the free indicators on your platform are lagging. Everything is lagging. Everything's trying to tell you what has already happened. And that can help you to a certain extent, but it's not going to tell you where to get in for the trade for the lowest versus highest probability trade. All right. Let's go on to the Aussie. So the Aussie is I would at the same talk track as I would say with the equity markets, because I do believe they are gaining ground at the same time as them. So we can see, again, almost same exact thing here. Coming off of demand. I know a lot of you took it short, a lot of you took it long. Now we're right in the middle. So anything that you're trading in the middle, either stay away completely or small size. That would be the only thing I would say right now, because yeah, you do have some in the middle areas. You can see this 5-minute down below at the 64.26, 64.16. And you can see where we are on the monthly in the middle too. Very nice bounce off of this. So you can see if it comes back, it'd be an interesting place again if it ever does try to come back anytime. But up above, you're going to hit up into some congestion once you get up into this 7,000 area. You can see a whole bunch of congestion in there. And then for the spot market, you got just different numbers, but same areas. You can see, and remember too, this whole is coming off of the larger 240 zone that everything's coming off of. That a lot of you took short, then some of you went long, now right in the middle. And same thing with this 5-minute demand zone. Again, it's going to be in the middle. Right, so just so you know those things, 64.25 and 64.15. I didn't see much to do with the pound. Even with all this news with the pound, the only thing that I've noticed with it is it's really not that weak if you really look at it. I mean, has it fallen off of the highs because it keeps hitting the same 240? Yes, absolutely. However, has it broken any significant support? No. So in terms of weakness, given everything that's been thrown at the pound so far, I would say it's not there yet. So again, if you want to trade the middle, you could trade the middle, but this is where it's at currently. It's not at any extremes yet. And so, there are sometimes little areas you could take that move it in one direction or the other, but towards the lows, you don't want to continue to short until you start to see something more significant, and same thing towards the high. So just be aware of that. But in terms of anything good right now, nothing terrific. Let's take a look at the yen. All right, so the yen, Sam did get on a nice short this morning with the yen off of our proprietary tool. And you can see that now that prices have come down close to demand here at the 93.78, 93.69 area. So we are very close to some demand with a bit of a 60-minute that is formed through that at the 94.13 to the 94.21. So you can see this area also very tight. But again, I would say this will have to do with the stock market as well. If the stock market falls back more, we've been in this area a few times as well, if you take a look at it. All it's really done is it's came from our 240 zone up to our 240 supply. We're kind of still right in it at the moment. So again, nothing, but this has been a very, very slow market in general, slowly moving up. All right, and then you said the Swissy. Let's go take a look at that. We'll take a look at both. So this is what it looks like now with the Swissy. All right, so we've been in this range for super long time. You can see really when this started from at the end of April, end of March. Now we're all the way at the beginning of May. So a couple of things I did say was that the supply barely touched right in there. So the supply still look pretty decent, but the demand, you can see how low it's went into the demand. I would say the demand is used up for a moment. Now it has created some more supply up above. And the very close one you can see is right up above at the 102.91 to the 103.06. And then you're going to have these two that's up a little bit higher at the 103.63. Of course, it's inside of the range in general. Still not your ideal place, but there is a little bit of supplies that form inside of there. So on the opposite picture, on the dollar Swissy, that would be the opposite side. And you can see actually it hit inside of here, so I didn't make it as a definite area because you can see that we did hit once. It can work again because it just touched, but given, so it did hit once. You can see that's 97.30, 97.21, because it looks like in the futures it didn't, but it did in the spot. And then you have these two lower zones here at the 96.57 to down to the 96.27. Okay. Regards to tomorrow, okay, if it stays inside of it and you see areas you want to take, that's fine. But if it's you would prefer to try to come out of these areas if on anything of NFP, because if anything is going to take out, if any sort of big volatility comes out, usually these small time frames inside of here are not going to hold up inside, because there's not, the reason why this goes on is because there's less and less, right? The demand and supply imbalance just isn't there anymore, right? Because that's why there's all this trading inside of there, because you're getting less buyers, less sellers, less buyers, less sellers, and therefore your smaller time frame inside here, especially if you have some, big news coming out, they tend to not do so well in general inside of there. So just a caution coming into tomorrow. All right. All right, terrific. So that is good. I will put up the page again. So those of you, like I said, the details of the new venture is definitely coming out next week. Very excited about what we have to offer. The team is working super hard we know your needs. We've been hearing it. Keep the emails. You can still email me for this final week to get that priority access. But we are hearing a lot of things of what you're needing, and it's you'll be happy with it. Definitely, I am, and so is the rest of the team. So have a great trading day. Those of you, be careful where we're at because of given the range that we're at. Just be careful and reduce some size in the middle or just stay away and wait for your extremes. All right. Have a great day, everyone.